Hi everyone, I'm Roy Güllüoğlu. Welcome to the another episode of Market Update featuring by Market Soul and Rationale. We are in the middle of very busy week. We'll be getting interest rate decisions from Fed, Bank of Japan, and Bank of England, and earnings report from Microsoft, Apple, Meta, and Amazon. On Friday, we'll get the non-farm payroll data, non-farm payroll report. Additionally, uncertainty around U.S. presidential election has increased. And yeah, let's take a closer look at how we can evaluate each of these events, and in like what it's so like a difficult environment to make some like forecasts about pricings and stuff. And yeah, I'll try to show my way of evaluation, my way of monitoring each event. Before we get started, make sure to subscribe to the channel, and if you find the video helpful, please give it a thumbs up. And yeah, as usual, let's first start with the economic calendar. Last Friday, we received the PCE number, which is closely watched by Fed members to evaluate their rate decisions. The headline number, as you can see here, the US PCE price index, showing a 0.1% increase for the month and 2.5% increase for the year, making the smallest annual rise since February. June's personal income growth was much lower than expected, with only 0.2%. This was the most remarkable part of the data, I think. It's the smallest number since November 2023. This drop in personal income is led to some buying in equity markets, especially after Google's earnings report, which caused a significant decline in indices. So in response to the data, we saw on Friday, the precious metals saw some buying, and yields on 2 years and 2 years and 10 years. US Treasury bonds fell, and US equity markets bounced back a bit. I'll come up to the charts and I'll show you in that. And for the rest of this week, on Tuesday, we're going to receive the CB Consumer Confidence Index and JOLTS job opening data, as you can see here. And the forecast for the CB Consumer Confidence is below 100. And JOLTS, the forecast is slightly lower than the previous numbers. And yeah, it's both these data gives some tips about the health of the economic activity, which has given a lot of warnings lately. A potential continuation of warnings, this kind of warning, would be influential on rate cut decisions of Fed members. And on Wednesday and Thursday, also on Tuesday, we're going to receive Microsoft's earnings. And on Wednesday and Thursday, Bank of Japan and Fed and Bank of England will all meet to decide on monetary policy, and each might make a different decisions. Several speeches and data releases from the Fed indicate progress towards the inflation target, raising hopes for interest rate cuts in the US and other developed countries. Many expect a rate cut in US in September, which aligns with expectation in countries like Canada, Switzerland, and those under ECB. On the Japan side, earlier this year, the Bank of Japan decided to raise rates and stop its policy of keeping 10-year yield on JGBs, like Japanese government bonds, low. However, higher rate expectations in the US and the higher for longer mentality in the US, and Bank of Japan's hesitance to tighten further weakened the yen. After the yen fell past, there was an informal ceiling for the USD yen parity, which is 152, and USD passed that level. That's since the last intervention of Bank of Japan, all interventions that they made was unsuccessful. And yeah, like, but after the last intervention, we saw like the movement from 162 to 152 levels. I will also show that in the USD yen chart. So the Bank of Japan is still buying government bonds, but it might reduce this purchase soon, probably this meeting. And politicians are also pushing for a rate hike, especially while the rest of the world cutting rates. If they hike, that will be much more influential probably. And about the Microsoft earnings, like this it's so crucial for the equity markets especially. So Microsoft is the biggest client of Nvidia, and which Nvidia was the driver of the market to this new records like up until now. And the more like in the when we look the earnings call of Microsoft, we need to catch if the capital expenditures of Microsoft, the share of the capital expenditure in the revenue is increasing or decreasing. That will be so crucial. But because as they increase the capital expenditure more, they will buy more from Nvidia. And since the main driver of this bull run of US stock market is Nvidia, that will be highly influential in that terms. However, like allocating a large amount without like corresponding income doesn't make sense, doesn't mean much. The market needs to be convinced about the ratio of capital expenditure on revenue. So this same logic also applies to the upcoming earning reports from Meta, Apple, Amazon, and like they're also part of the Magnificent Seven. In that terms, that will be so crucial. And apart from that, on Friday, we're gonna receive like the non-farm payroll number, which is expected to be 177K. It's a significant drop from the previous number of 206, as you can see, the forecast number. It's a significant. However, we should remember that previous data on non-farm payroll have been revised like frequently. This constant revision has been a major warning sign about the job market and overall economic activity. That's why, yeah, as we see more like a revision down on payroll numbers, that means like those warnings are more serious than we know about the economic activity and like a job market. Additionally, we'll be watching for sure average hourly earnings as an indicator of a potential wage price spiral, because as I mentioned, like there's a like really nice progress on inflation side. And yeah, average hourly earnings is like it's a must data to watch its potential path of disinflation. So to wrap up, like where are we right now in the market? Like what's going on? Like in general, there are a lot of like data coming up, but we need to wrap up. Like we need to evaluate each concept, each narrative by itself. You know, we need to know which. Okay, let's say we're talking about rate cuts, but rate cuts might be influential on this. Earnings might be influential on this. With this mindset, I think we should go on. Yeah, like I think the market pricings in the upcoming days will be shaped around like 4 headlines mainly. First of all, like earnings side, earnings surprises are like decreasing up until now. This like the earnings surprises reported so far are lower compared to previous quarters. The main reason is behind that is the analysts' expectation remains so high. So even good earnings reports aren't leading to strong upward surprises or upward like buying activity. So the earnings of Magnificent Seven stocks, which have significant weight in the indices, are expected to impact the indexes, right? Like considering Nvidia's contribution to the market's current levels, like poor earnings from this week, Apple, Meta, Amazon, Microsoft could indirectly hit Nvidia, and accordingly, for sure, the Nasdaq and S&P futures. So let's check quickly the S&P futures and Nasdaq charts here. First of all, this is S&P futures chart. Here there was a really nice copy candle chart pattern, a breakout occurred, and currently we see a pullback towards the blue line is 50-day moving averages, which is like a pretty crucial. It's moving average that we need to follow. But when we go to the higher time frame in the weekly, that's how I analyze the S&P 500 chart. First of all, in the market generally, we expect the main movements to be like, first of all, consolidation period. As you can see, I mean, cup and handle-ish kind of formation here. This is called consolidation. The price is getting like tightened. After that, we need to see an accumulation in order to see the upward movement. This is called actually stage analysis. You can also Google it, the stage analysis. Like stage analysis is like there are like 4 stages. First one is consolidation. Second one is accumulation. Third one is distribution, and the fourth one is capitulation. As you can see, after the capitulation, there's a really nice HNS top chart pattern formation. It's kind of more like stable movement, stable price movement. Then we saw a decline of, let's say, as you can see here, is 27% decline in S&P 500 futures. And currently, where are we right now? When we delete all these, this is stage 4. Another stage 1 is expected to be formed, right? And here, as you can see, really nice rectangle chart pattern in the weekly chart established as a consolidation phase. And currently, we are at the accumulation phase. The question is, when is this accumulation phase going to be when are we going to see the transition from accumulation to this distribution phase? We need to see some horizontal price tightening phase to say that. And currently, I still see that it's the upward momentum is pretty strong. It's like this is like a 10-week moving average, and it is actually like natural to see such correction towards this 10-week moving average, and it seems pretty normal to me. When we come to Nasdaq, in the daily chart pattern, we see this same correction of 10% here. Especially it got like really powerful after the Google's earning. And how I follow this Nasdaq chart is this parallel channel here, and like a downward, the lower trend line is being tested right now, and the warning side is here. The price came below the 50-day and 21-day moving averages right now, but it's potentially like we can see if the earnings like comes better than, especially the part that I mentioned, this capital expenditure. If the market likes that capital expenditure, the AI sides, because the market want to see some revenue generation on the AI side, and if they see some hints from the earnings report, we might expect to see some rejection from this trend line, and the price might go to its like 50-day moving averages and more. So yeah, coming back to the like after the earnings side, what's the 4 headlines I said? Like first of all, earnings. The second one, earnings, I mentioned like the potential impact of earnings on indices, S&P and Nasdaq. The rest of it, the first of all, the Fed rate cut narrative. Another one is election, and the last one is Bank of Japan's potential actions. So this four headline will be shaping the markets, I guess. On the Fed rate cut narrative, how should we follow? What could be potential impact of it? So the macro side is expected to impact rather than to see the impact of Fed rate cut on indices itself, because indices like mainly like composed by all like Magnificent Seven. I think earnings will be much more influential on that, but the macro side will be more influential on sector rotation, which is ongoing right now. The reason is that like lower interest rate, the potential lower interest rate, will relieve some mid and small sized firms which tend to have like higher debt levels. Therefore, like it makes more sense to watch sector rotation from a macro perspective. It's like, okay, if the rate's gonna come down, stock's gonna go up. It's not like that, I think. Like if the rate's gonna come down, we might see further sector rotation. It wouldn't guarantee the continuation of the indices making high. That's my perspective. So yeah, let's take a look at the Russell 2000 index to monitor how the sector rotation is going on. So here, as you can see, this is the Russell 2000 index, and there was a really nice, like, let's say, I don't know, like maybe 70-day symmetrical triangle broke out, and this to see like price tightening after this kind of move is pretty normal. We might expect it to be like in the 4-hour chart, you can call it like a flag, maybe, I don't know. Yeah, you can, it could be evaluated like that. I think like it's pretty normal right now, and it is potentially like pull back to its like a short-term moving average of 21-day moving average. But when we come to the higher time frame, this is much important part for me. As you can see, really nice. As I mentioned in the S&P chart pattern, after the stage 4, stage 1, we saw a breakout here, false breakout, again breakout, and it's moving like that. I think we're in stage 2 here in this chart, and it's like, I expect it's like still the momentum could increase, especially if we get more news from like a rate cut expectation. Also, I would like to show you this. I had showed this in the previous videos actually. The ratio of Russell 2000 and Nasdaq in the daily chart. This was the beginning of the sector rotation. As you can see, here is there's a resistance here going on. And potential pullback from here might lead to form, if we see like rejection from this minor low, we might see HNS bottom formation to form here in this ratio. And this is another way that you can trace. As this chart goes up, that means Russell 2000 like outperforming Nasdaq. That means the sector rotation is still still continues. So yeah, coming back to also, I would like to mention, sorry for that. Let me come back to the chart. Apart from this macro side, I believe that election would be so influential on pricings. So due to the after Kamala Harris after Biden, Kamala Harris will be running for the presidential election. So due to this election, probabilities converged to 50-50 after resignation of Biden. There's a possibility of increased uncertainty here. That might lead to some risk-off pricing. So to monitor a risk-off pricing, so in general, what we do is, okay, this might lead to a risk-off pricing, but do we really see that? There is some I also suggest this to everyone. Just get some make a list of indicators. For example, risk on off. If the risk is on, okay, I need to check, for example, Oz yen, because yen is more like a safe bet, and Oz is more like a growth-based currency. If we see an increase in Oz yen, that means okay, risk on sentiment is valid. So in order to evaluate if there's a risk off sentiment is coming or I generally check the relationship between gold and oil. So first of all, let me start with the gold chart. Here, I still believe the 50-day moving average is still holding. The main uptrend is here, as you can see. This after this HNS continuation broke out. I mean, it's so normal that we see such let's say tightening here, stopping after this kind of huge movement. And yeah, I'm monitoring gold like this. And as all you know, like as a safe bet, like if the risk of sentiment comes back in, we might expect to see like a better pricing in gold. That's how I believe. And also, when we come to the oil, in the weekly chart especially, as you can see, there is a symmetrical triangle. Technically, this kind of symmetrical triangle might act in both directions. But as the risk of sentiment, especially due to the election, comes into the action, we might see that the continuation of this symmetrical triangle to downward. Also, in all election periods, the gasoline price becomes really important. And I think like in terms of if they need to especially for the current government, like lower oil prices might be much beneficial for them. And yeah, that's how I follow the oil price. And when you come to the ratio of oil and gold, to confirm there is a risk of pricing, we need to see this chart, this price to go, like this ratio to go down, right? And here, as you can see, after all this uncertainty, especially arised from like this week's volatility, push this ratio this level. And yeah, I'm also monitoring this one. Apart from that, as I mentioned, you can follow Aussie yen parity, Aussie franc parity, as franc is like Swiss currency is also safe bet. This is another way to monitor risk of sentiment. And yeah, apart from that, like this week, as I mentioned, Bank of Japan decision will be crucial. So the potential story of like Japanese investors who hold like a second largest amount of foreign bonds, U.S. Treasury bonds, returning home due to the Bank of Japan rate hike or lowering the demand of Japanese government bond. That's another story for potential market pricing. And here I would like to show current USD yen level. Where are we right now? In the weekly chart, as you can see, there was a really up. Let me come from here actually to show you how big this price movement after this monthly head and shoulder bottom chart pattern formation broke out, pulled back, moving higher. In the weekly, as you can see, there's a really nice copy tendril, broke out, pulled back, moved higher, and pulling back here after the Japanese Bank of Japan intervention here. And now, as you can see, we saw rejection from this level. And yeah, depending on all this central banks movements and stuff, I think we'll see which way it goes. But still, technically, I see as long as the 152, especially that informal ceiling of Bank of Japan is protected, the main direction is still upward. And also, while I'm speaking of USD, let me show you where are we in dollar index right now. As you might recall from the previous videos, I had mentioned this potential double bottom here, and now it's turning back. But yeah, that's how I'm following. Also, risk of sentiment will increase the demand to the dollar index for sure in that scenario, also due to the election. So to wrap up, we need to evaluate which of this four headline will be much more powerful on market pricing. That's the story. And if we can evaluate all these indicators, if we monitor all these indicators to see their reaction, if we see higher reaction from, let's say, risk-off side, we might say that, okay, election is the main driver of the current market pricing. That's the mentality. That's how I'm trying to evaluate current market condition. And yeah, that's all I'm going to talk about this week. Thank you for your listening. Thank you for your time. If you find all these videos helpful, please subscribe to Market Soul YouTube channel, and please give our videos a thumbs up, and have a great week.